in this video, I'm going to cover Wyckoff, right? I'm pretty sure some of you are familiar with Wyckoff. But before we get into Wyckoff, let me show you some images of what essentially Wyckoff is and what I'm going to teach you today. Okay, so this is a typical Wyckoff accumulation schematic. Right, let me ask you something. If you're not familiar with Wyckoff, what is the first thing that comes to your mind? It's a little bit complex, but you can understand there's basic price action. What if I show you this schematic? Okay, there's different schematics. As you can see, if you actually zoom in real quick, notice how with several patterns, there's phase A, such as this typical BOT pattern, for example, there's descended wedge, phase A, phase B, phase C, D, and E, right? Even a double bottom, there's multiple phases, right? Zoom in here to the bottom, there is absorption of supply, ascending channel, highs and lows, etc. Head and shoulders, right? With breaks of structure and the other schematics. Over here, a conventional trading range with a spring, right? A cup and handle. Lots of schematics. Let me show you this over here. This is more of a traditional Wyckoff logic. Accumulation, markup, distribution, markdown, spring, low fade off, the test. There's a selling climax, essentially the move to the downside, then a rally, and then it starts to accumulate, consolidates. There's a fake out, there's a test, there's the markup, the distribution, right? What is going through your head right now? Am I talking nonsense or what is actually going through it? I want to ask you something. Okay, let's look at another image, right? Similar concepts, the same thing. It's just noted differently. Price markup, jump the creek. What else is there? There's price markdown. Everything here is completely valid. It's the way the market moves. There's multiple phases, accumulation schematic 1, etc., etc. I just went through this with you guys. This is more or less the traditional one. This first one, very, very simple to understand, but I know it looks complex. If we look at this, I mean, even just zooming into, just typing into Google, you know, Wyckoff. What is Wyckoff? It's all free online, right? Multiple phases. And if you zoom in, there's also support and resistance. As you can see here, if you zoom in, you can see there's resistance levels, support levels. There's the LP is low, the spring phase C, you know, there's a traditional markup just explained differently, accumulation area. So there's a lot to understand when it comes to Wyckoff. So let's go to the charts. Okay, now you're probably thinking, wow, am I really going to learn this? No, you're not. I'm going to show you and explain something very powerful. As a trader or anyone who jumps into trading, as a human being, you are wired to overcomplicate stuff. Trading, one of the secrets to trading is simplicity. Viewing the market in a very simple way, removing indicators, having a very simple strategy and a simple approach. The more complex the strategy is, the more you have in your charts, the more information you need to take in, the less likely you are to perform because you've got a lot going on. So with Wyckoff, essentially it's just manipulation. The reason I showed you all those images is just to give you an understanding of, you don't need to know everything in Wyckoff. For example, you don't need to know everything in Forex. You don't. If I explain to you, okay, as a Forex trader, do you know how much a pip is if a bank moves the market or something? Or what is the code behind the MT4? What's all the other tabs in MT4? Why is there do you need to know everything? You don't need to know everything. You need to know what works, right? This is the power of the BOT. I'm showing you what works, right? So if we go to the actual markets, it's just manipulation. That's the whole purpose of Wyckoff. You don't need to understand everything. You know, you don't need to understand the buying climax, the UTAD, the automatic rally, etc. They are there for you. You don't need to mark it out, but with the BOT, you just need to understand manipulation, fake outs, and patterns, and that's it. If I show you some examples of Wyckoff, there's examples everywhere. I mean, I'm looking at the H4. If I go to, let's say, this market, this range here, there's Wyckoff here. And I don't need to draw everything, you know, you don't need to understand all the terms. The terms could be called Bobby, Michael, Dinosaur, and Barbie Girl. It does not matter what the terms are. I know Richard Wyckoff, he came up with the terms, but again, it doesn't really mean anything. It's like patterns, you know. Okay, even looking at this example here, I can easily zoom in and note down everything that you just saw, all those Wyckoff screenshots and images. We can look at the spring, we can identify that this is a UTAD and the up thrust and the buying climax. There's a lot going on. You don't need to understand that. So the beauty of the BOT course is that I make it very simple, right? And how is it simple? You just need to understand understand that the markets are manipulated. Who moves the markets? It's not us. We are just participants, right? Who really moves the markets is the composite man. And who's the composite man? The banks, the institutions, the banks, the hedge funds, all the big players. And guess what? They don't have screens with Wyckoff and accumulation and upfrost and all that nonsense. They don't have that. They move the markets because they can with liquidity. They are constantly manipulating price always. They don't have patterns as well, right? They don't have patterns. If you ask a composite man, such as a bank or a hedge fund, do you use patterns? No, they don't. They'll probably just laugh at you. And the reason I say that is because banks and institutions and hedge funds, when you think about it, they are essentially like a very futuristic, high-tech submarine, state-of-the-art technology moving from island to island, banker block to banker block. They are moving from island to island because they can. And they're constantly updating these levels, right? We are essentially just participants in a rowing boat, wooden rowing sticks. That's it. That's all we are. But guess what? We can do the same thing as them. We can still move from island to island, but just taking small crumbs from their leftovers. We can still eat from their cake. And how do we do that? Well, simply just by identifying when they manipulate price. So again, if we zoom into all these Wyckoff schematics, which are everywhere, you can just see that everywhere, all the manipulation, right? Even larger versions of them. Even when you go into the smaller time frames, there's going to be Wyckoff schematics everywhere. You don't need to understand every single point. It's the point I'm trying to make, right? Otherwise, you will start overcomplicating stuff. So with the BOT, you just need to know when to trade, how to trade, and why. And how do we do that? By using the patterns, the boomerang, equal highs, equal lows, etc., right? So for example, understanding, let's say this example here, there's a Wyckoff within a Wyckoff, there's manipulation. But do you need to understand what every single term is? No, just need to understand, is there a pattern? Then we trade it. This is the beauty with patterns and the boomerang. That's it. It eliminates all the noise. It does the stop hunt for you. And then you can hold the trade all the way up to previous high, previous UTAD or previous banker block, etc. You just hold a trade according to trade management. But this is the beauty of the BOT. You're eliminating and skipping, not just support and resistance, just overcomplicate stuff. There's too much going on. You don't have to use indicators and moving averages. If you do, it's fine as long as you backtest it, whatever, down to you. But me personally, I don't use any moving averages or other indicators unless it's a Fibonacci to draw the imbalance, for example. So with a boomerang or with a pattern in general, you're skipping all the noise, all the information that you don't need to know. When you're driving a car, for example, you don't need to know what every single term is. What's a turbo booster, or what's this metallic cylinder inside the engine? You don't need to know that. You just need to know, okay, how do I turn the key and move the clutch and press the accelerator button, for example? You don't need to know everything. It's the same with the markets. You don't need to know everything. Just understand that the markets are manipulated. And the beauty of the BOT is that you're literally just catching these trades and that's it. And even to the upside, look, you're catching boomerangs, right? So do we really need everything? No, we don't. That's the purpose of this video. It's just to show you that the markets are manipulated constantly by the banks, the institutions, and the hedge funds, right? And how do they do that? Well, they're constantly updating price. So look, if we go to, for example, this particular banker block, they had an intention to move price towards this area. We look to the left, all the way to the left, for example. Let's say this particular banker block. Look at the move of it. Massive rally to the upside, massive rally to the downside. They are playing ping pong with you, right? Ping pong. And a return to this price. And then guess what? It found a new area down here. Then it made a rally all the way up to the upside. And it stopped around here. Why did it stop there? Well, there was actually a banker block here, right? And that was the cause of this move to the downside. It's very, very simple. The markets are manipulated. Best believe that the institutions and the hedge funds and the banks, they don't care about lower highs and higher lows and moving averages and patterns and everything. They don't. They are moving price from price to price, and that's it. But what we do, as for us as participants, we don't really, as for us as participants, even though we can see where price is going to go to next, it's quite hard for us to determine which one at what point is going to be correct without price action. So we do need price action. We do need technicals just to give us an edge. They're not going to hand over the submarine. They'll, you have to make your own boat, have the rowing sticks, and then just follow their route. And there's going to be turbulences along the way because this is definitely not easy, right? And the beauty with the BOT is that you can see exactly what's happening, right? Even if you just have a large pattern, you can see where they are going. And they've got different intentions. They are not, their levels and their algorithms are everywhere. There's some here to the left. They've got orders up here somewhere that we don't know about up here. Zooming out to the daily, they've got some. It's constantly updating. It's a crazy matrix algorithm. Bunch of of millions and millions of orders. And when price is moving up, the algorithm or where the order is at, the liquidity, where they're targeting next, that's going to update. And this will probably delete, update within a second, come here, drop to the downside, retest this banker block, and it'll probably come down here, for example. Right. And as it's going down, even though they've got orders here, the algorithm and the matrix will just update to this one or cancel the orders here. And it's just they're constantly negotiating, moving the price. That's what you need to understand. You don't need to know all these Wyckoff schematics. Just know that there is manipulation left, right, and center. Right. And we're using the BOT just to give us that little bit of an advantage against other market participants. You can just see this everywhere. Right. Look at this. It's just stop hunts. That's all it is, guys. It's just stop hunts. Understand how stop hunts work and you have an edge. That's it. Just know there's equal highs. There's a stop hunt. Previous low, equal lows, liquidity pool, most likely to the left. That's it. It's just manipulation. So if you come into the markets just with an understanding that the markets are constantly updating, manipulating, and evolving in real time, you have to as well. This is why we use pattern updating. We're updating our levels, our banker blocks, our own balances. We're constantly we're constantly riding. We're basically grabbing onto the submarine on our little wooden rowing boats and getting to the next destination. That's essentially what we're doing. If we look at this euro trade, for example, this already, because of patterns, is telling me it's going to drop to the downside, most likely to this banker block. And guess what? Within that price action, there is Wyckoff, right? On the lower time frames as well. If we zoom into the H1, you're going to find more Wyckoff schematics. Do we need to know everything? No, we don't. There is Wyckoff here. You can see there is a new updated Wyckoff. There's a larger Wyckoff that's most likely in play here. As you can see, it's probably going to come and retest the bottom of the range. The markets are constantly moving in ranges and manipulation. Ranges and manipulation. That's all it is. That's the approach that you have to take when you're looking at the markets. And let me repeat that. The markets are constantly moving in ranges, and these ranges are constantly updated, right? Some are larger than others, and then sometimes they're quite small. They're within each other, and it might retest a new range, and then it will just form a larger range, and then the smaller range. The markets are quite complex, right? It wouldn't be easy. Otherwise, everyone's going to be profitable. But just understand that within these ranges, the way the market moves, there is accumulation, there's distribution, there's stop hunts, and then just literally everything I mentioned before. All the Wyckoff images that you saw is happening left, right, and center. That's the way the market moves. That's it. It's very, very hard. But we use patterns. That's what we do. And equal lows and quasi-models, we use patterns. We use patterns and other forms of stop hunts to identify what's actually happening. We don't need to know which one is the valid, relevant range. We're focusing on patterns. Look, like this pattern here, for example, this is just completely random of me, but look, equal highs, stop hunt, boomerang, simple. That's the way the market moves, everyone. It's the markets are designed in their best interest. They negotiate, they move the price. If they want price to come up here, they will move price up there. And they're not going to make it easy for everyone. Within this move to the upside, the algorithms here to the left and all the banker blocks, it's going to be updating, deleting the orders, readjusting them, adding new liquidity. It's very, very complicated. And that's the reason why the markets move like this. And it's just hard and messy to trade, right? This is why the markets are hard. That's just the reality. It's just the reality. So fortunately with the BOT, you've come to the right place. We used to work in a trading floor and we saw the heat maps. We saw where the algorithms set the orders and how they updated it. We've reverse engineered liquidity, and it wasn't SMC. It wasn't order block. That's just a term. That's a mainstream media term. We could visually see the orders with the amount of lot sizes they have. You can see there's hundreds of thousands of lot sizes in one particular level, and we can see that updating in real time, even if price is up here, right? So our job was to reverse engineer it. They didn't want to give it to us that easy, right? We could see how much orders are here, right? Just Google what a heat map is. There's some softwares online, but the one we had was very, very expensive. And all it was, it's just orders. It's just price. That's all it is. It's just price. There's no such things as, retail. Even SMC is retail, right? But the beauty of SMC is that's the closest thing you're going to get to the way the composite man moves the markets, right? Because SMC is extremely powerful. In a nutshell, SMC is like a speedboat. It's not a submarine, it's a speedboat, but at least you're not in the retail area, rowing a wooden bowling stick in a wooden boat with holes in it. That's retail strategies. SMC is an upgrade. It's the closest thing you're going to get to the real thing, but nobody has the resources that the banks do. It's just impossible. But at least we can be in a speedboat within the blue ocean. So let's study this piece of information just one last time. We are going to see that this is the H1. And what do we have here, right? This is very, very simple stuff, right? We've got a new sort of low here. There we go. New low. does a stop hunt. This is what you call the spring, rallies to the upside, takes the liquidity, does a retest, and this is the retest. It's just simple stuff. It's just a retest. You just need to understand the way the market moves. And no coincidence that there is an imbalance here. There's equal lows, there's a QM. We're using patterns that are powerful and easy to understand. Simplicity is key. That is the moral of the message for today. Don't overcomplicate stuff. Keep your charts really simple and just understand that price is extremely complicated, but there is always stop hunts, right? You don't really want to be in a trade here. You want to be in a trade up here or down here. And even if this is a new high, the moment it moves a new high and it makes a new low, such as this, expect, always anticipate there is always going to be a stop hunt, always. And as it updates in real time, there's new highs and new lows. Always expect a stop hunt and a retest of previous banker block. Expect new ranges to form. Expect stop hunts. Expect these patterns, stop hunts, right? This is what you need to understand. Now, to understand what's the right range, etc., that's for a different video. Now, to understand what's the correct range, etc., that's a different subject. What I'm trying to explain to you guys is to show you that the markets are very choppy, but you can take advantage of the ranges, the manipulation by using the BOT patterns and the concepts that we teach. Now, if we look at these examples again, notice how you don't really need to understand every single point. Just understand, if you look at the spring, look at the way the market moved to the downside. It formed a boomerang. Who can see the boomerang? Here, look. 1, 2, and the top end, 1, 2. All of this descending wedge formed a boomerang of that pattern. That formed a spring. And on the retest, we can catch that on the boomerang retest, right? On the way up, there's another example, right? Again, look, everything here, you don't need to understand it. It's just too much information. You can if you want, if you're the kind of person that just wants to know everything, completely up to you. But there's always two types of people. There's the one that is obviously smart and wants to just know everything and add stuff into the arsenal, or there's the other smart person that likes the simple way. I'm on the other side of the spectrum. I've always been very simple when it comes to technicals, when it comes to trading, because I started off overcomplicating the life out of myself when it came to trading. I used to have every single indicator, every single zones, and it was a mess and I was never profitable. But when I realized the more simple it is, that's when I started becoming profitable. And when there's new information such as Wyckoff, when I first discovered it, it was too much, right? So as unfortunately I've realized in the trading floor, we don't need it. It's just more information for you guys to just study, learn, and just to overcomplicate stuff. You essentially do not need it. It works. Everything works and is there, is real, right? The test works. We trade it. The selling climax, it works. We trade it. But at the time when we trade it is normally a bearish wedge, or the selling climax, we trade it. You know, the LPS, the last point of support, we trade it. But at the time when price action is forming, all these concepts and schematics, they can be translated in patterns, wedges, boomerangs, free aces, quasi-models, equal lows, equal highs, stop hunts, liquidity pools. Everything you can capitalize using the BOT pattern. So you don't need to understand everything. You just need to understand that the BOT works and this is real. This does work, but this is just a very complex version of how the markets move. The BOT is the simplified version and it's what works. I always like to compare the BOT with everything online, such as SMC, Wyckoff, and all the other concepts, which again, it works. It's like a Rolls Royce. A Rolls Royce is quite complex in terms of its engineering and state-of-the-art infrastructure. But the BOT is like a Tesla. Simple, it does the job, but even better. Okay, fantastic. So on the last note, before we wrap things up, just want to say that because you're watching this video, I don't know what your name is, but you are here putting the time in, you've invested in yourself, you're working hard, you're watching this video right now, listening to my voice, and you are putting in the work. You are in the right place. Whatever strategy you had before, whether it was profitable, but you were still struggling, whether you never had a strategy before, or even if you had an SMC strategy, but you were still trying to grasp how to actually capitalize on it, or even if you're a profitable trader and you just want to improve anyway, right? This is what traders do. You improve, you learn from other strategies, you reverse engineer it, you make it your own, you then become a mentor, and you can have mentees. Like, I'm pretty confident that a lot of you guys will either get funded or you will be mentors yourself and teach other traders how to capitalize on the markets. So on that note, the fact that you're here, like, honestly, give yourself a pat because you are going to see results, right? You will get funded. You will become a profitable trader. You will scale your business to 6-7 figures. You will have investments. You will be funded with CTI and multiple prop firms. You just need to put the work in, have a bit of patience because it's not going to come that easy. A lot of the traders that are now profitable, they're getting funded, they're passing accounts, right? It took them a couple of months, but they were putting in the work. A lot of them are now forecasting exactly exactly the way I'm forecasting. Not all the time catching the same trades as me, but a lot of the times they do, but they put the work in. They came in with whatever knowledge they had before, whether it was SMC, a retail strategy, or patterns, or any other, whatever knowledge they had before, whatever strategy they had before, they are now gradually becoming consistent, passing accounts, evaluations, right? But these are the same guys that are committed. They put the work in, they do the homework, they backtest, they ask questions, they get feedback, they attend the live streams, right? Because they want it. So that's one type of trader. The other type of trader is they watch the videos, go to the charts and expect to make money. Never going to happen. You're going to struggle. It will just take a long time for you to see results compared to the type A person that I just mentioned. So put the work in, believe in yourself, because you will see results with the BOT.